Hi guys, welcome back. So today I will talk about a new IPO stock called Didi Global under the ticker symbol DIDI. It will be public tomorrow and start trading. I've got quite a few Discord members asking me about that, so I want to make an introduction of it. And I think almost every single Chinese person would know what Didi is about and more than likely have been using it. So Didi is the Uber of China, and it is the world's largest mobility technology platform, covering in 15 countries with almost 500 million active users annually and 15 million active drivers. And their vision is to build the future of mobility. Now, I will start with the pro and then follow up with the con, so you can decide whether this is an investment for you. Now, first of all is the supporting power behind this company. It looks much more complicated than you think. It is a company that is backed by many large companies, organizations, and government-owned entity as well, because this has quite a complicated history. The company has been founded for less than 10 years, but before the IPO, Didi had already completed 20 rounds of capital raise. So within the past 8 years, for 20 times fundraising, they had raised more than 20 billion US dollar. It is probably the company that had raised the most fund in the past before IPO. So that is why it is considered a unicorn company, and this IPO is creating quite some buzz. Interesting enough that Didi is the only company that all the BAT had together invested in. So Baidu, Alibaba, and Tencent. Usually these three giants are usually competing with each other, and they each have their own version of the same product or platform. But in this case, they all invested together in Didi. So that is very interesting, and it's the first time we see this. And it's not just the BAT that are backing Didi. We can see here that the SoftBank owns 21% of the shares of Didi, and Uber owns 12.8%, while Tencent owns 6.8%. And on top of that, you can see also a lot of the Chinese government-owned institutions also invested in Didi before, like some major banks, insurance companies, and investment companies. More than 20 organizations with government background had history in investing in Didi. So this is very, very interesting. Why did Didi raise so many times funding, and also why so many different organizations participated in the investment of Didi altogether, within and outside, in and out of China, like Uber and also Apple also invested in them as well. And to understand that, you have to know the history of this online taxi platform, because just a few years ago, it was a bloody competition between a lot of different platforms at that time, including Didi, Kuaidi, Yidao, Uber. And within the Chinese players, there were super fast competition, and the solution always comes down to who can give better incentive for the drivers and the users. And this would mean that the platform is losing money to give out incentive in order to gain maximum users. And the strategy is to see who can survive in the end, because if you give out the most incentive and the other players cannot survive in the end because they don't have enough money to lose, then the other competition would eventually fade out. And as long as you can survive in the end, then you're winning the whole market. So that is the whole idea and the whole strategy of this industry back then. So that's why they all need a lot of capital. It was bloody competition until one day they just sat down together and say, hey, this cannot keep going like this. I'm burning too much cash here. Even after raising constantly so many rounds of funding, still it's hard to sustain like this. So how about we just merge and stop bleeding? Everybody is happy. We combine our users and market share. So that's why at that time, Kuaidi and Didi were each backed by Tencent and Alibaba, and they had decided to merge together. So this is how the usual battle between the BAT, the Alibaba, Tencent, and Baidu had in the end merged to become one company. So they ended up all investing in this same company instead of competing in this field. And when Uber wanted to enter China, instead of starting the bloody competition again, they also had this talk and decided to have shares in each other. So in the end, Uber took 12% of Didi's share and decided to not enter Chinese market. And everyone was happy because it saved them a lot of the cash burning for incentive. So it was the nature of this industry that had decided in the end that so many different parties from completely different backgrounds ended up investing in the same company, which is Didi. So no wonder it is said that the Didi's IPO is the biggest IPO of the year of 2021, and actually the biggest IPO in the US market of Chinese companies since Alibaba. So many parties involved behind backing it. It is not simple at all, even Uber and Apple. And just the last survivor to be Didi in the end seems to be quite difficult thing to do. Now, in terms of the valuation of the company, their revenue was US dollar 21.6 billion in the year of 2020. So if we use that number and compare with their valuation right now, which is aiming to be 60 billion for the valuation, with the IPO price of 13 to 14 per share, and this would give them a PS ratio of 2.77. It's not even 3, so it's very fair PS ratio, very fair valuation. Because before the IPO, it was always said by rumors that the valuation would be around 100 billion US dollar, which kind of makes sense because remember, just by 20 times of raising fund in the past 8 years, they had raised already 20 billion plus US dollar, and now their target is reduced to be 60 billion. A little before the IPO, some people were speculating it was reduced because of several reasons. One is the China-US relationship being tense right now. Two is the macro situation for growth stocks in general recently. And three is the anti-probe actions by the government, the Chinese government recently, because Didi was one of the companies in the list from the government to be potentially filing anti-probe investigation. So these are the three reasons why Didi had reduced their valuation before the IPO by not just a little bit. But for me, I have some other thoughts than this I will share later. Now we have covered the valuation and what they have achieved. Let's talk about their growth. Didi has quite an ambition as well. Now they have been dominating the share mobility. The next direction would be expanding their market to international market, to other countries, and also to electronic mobility and autonomous drive, and also food delivery and financial services. So this would be a similar strategy as Uber, because Didi had reduced a lot the cost per kilometer in the past by share mobility, and in the future would be more by the electronic vehicle and autonomous driving in the future. So that would be obviously the company direction next, which is also one of the reasons why they needed this IPO. They needed more money to do more R&D into autonomous driving. On top of that, they also want to build their own cloud platform and also financial service, because they do not want to rely on third party to do that. So to summarize, they have a big ecosystem in order to control all the parts included in the service or the chain. So adding on top of their original business to build more extended services to achieve an ecosystem, that is quite an ambition. Started from a small entry point. As you see here, that's the vision. Once you open the Didi app, you have ride, you have financing like borrowing, bike and e-bike, freight like logistic, delivery, carpooling, navigation. They want to build their own mapping system. Buying fruits, taking bus, subway, hitch, charging the car, leasing, auto service, counting steps, mini games, even phone recharge. I would think this is almost having a whole Alipay or WeChat Pay app almost. Quite a complete platform. Very big vision here. So to sum up, the pro, you have strong backup from a lot of big institutions within and out of China, giving them great resources. And then you have a fair valuation because they had cut the valuation by almost half before the IPO, especially compared with their history of capital raised in the past. And then they have a big vision in the future for more growth points or opportunities later to come. So now I will go over with the con. First is that I don't see where is the end of this business, because it did raise a lot of capital in the end for the last few years, which was more than $20 billion. And now they are bringing the company public with $60 billion valuation, raising about $4 billion US dollar this time with the IPO. Even though the company has fair valuation of PS ratio to be less than 3, the company's total loss was 8.4 billion yuan, 1.3 billion US dollar in the year of 2020, which was 3 times the loss compared to the year of 2019. So it seems like the speed of losses is not minimizing but getting faster. And we know the nature of this business, and the competition was to give out a lot of incentive, burn out a lot of cash to earn the market share. Constant loss like that to be the survivor. The company did say that they're near making profit at some point, but with this financial report, it doesn't give out much hope yet. And even if they can, this business is still a low margin business by nature, because the internet business strategy is usually to fight for the market share, earn a lot of users, kill the other competition, and then you can start to reduce the incentive and raise the price. But it turns out at this point, Didi still cannot increase their price because there is constantly new competition in the market fighting for market share again. So it does make me feel a little like, where is the end? Because they had burned 20 billion plus already in the past few years. What would the new 4 billion they raised help? Especially after I see the ecosystem they want to build, the big vision they have. If it cost 20 billion in the past to be the survivor of their core business, I am not confident that 4 billion more from the IPO can help build this big vision of the company, because it involves much more competition from each of their own field. For example, food delivery would be direct in competition with Meituan, which is the definite giant of food delivery in China. And so are e-bikes and delivery service. All of these fields have leaders of the field and already mature market in terms of competition. So I don't know if Didi getting into this field is opportunity or more cash consuming expansion, like over expansion. In this way, it's a little bit similar with the Best Inc., the video I shared last week about the logistic company, and they had this issue before from overexpansion, burning a lot of cash, and still haven't figured out the core business model. So in this way, Didi Big Vision reminds me a little bit of that. So in this case, I would think the business model is still unclear to me, or maybe just I don't get it, or just too much uncertainties for me at this point. Maybe I will need to see more later to have more clarity. And the next con is the moat of this company, because it seems to me the moat of Didi right now is the biggest share in the market. But it's not enough for me, because it seems like it's lack of strong technology to back up or to prevent new competition or latecomers to steal their market share. This picture can tell you that right now, even though after many years Didi has survived in the end, there are more and more competition appearing in the market. Like, for example, Cao Cao. I've heard some other friends using Cao Cao instead of Didi because the user experience feels better. And they already rank number 3 in terms of market share. And Gaoder, the popular map, is also doing this mobility solution now. And also Meituan, what we just mentioned, the #1 food delivery platform, also getting into this field. Seems like everyone wants the share of it. And this is just for now. And in the future, I see more and more competition from other industry. For example, the car industry. Newcomers like Neo Xiaopeng, they can totally get into robotaxi and steal the market share from Didi. This seems like a natural path for car companies to grow. Like this Cao Cao is invested by Geely Auto, and these are just top players. You have many other smaller players that I don't mention here. And it seems like Didi's moat that they have built over the past 8 years is not strong enough to prevent latecomers to steal their market share. Because how they won the market share to begin with was to give out incentive by losing money. And users build habit by incentive. As long as there is discount coupon, they can get it cheaper, they would be willing to download a new app and try it out. And drivers follow users. Whichever app more users use, they would install that. And also drivers follow also incentive, obviously. So there's nothing money cannot solve. So it comes down to my first point again, where is the end? So it seems like the final solution for me would be whoever have the best technology and user experience. Best technology to reduce the cost to benefit users instead of just losing money for the company to give out incentive, like robotaxi, autonomous drive. That would be a much better solution than giving out incentive and more sustainable for the company. And I know Didi is going to develop their autonomous drive, but at the end of the day, they don't have the core technology, the moat in this field. So right now, it seems like in this business, Didi is actually getting weaker moat, as it is too easy for others, the newcomers, And after a few years, there is more competition again, which is the flying car, the air mobility. Again, then there are companies already developing the technology, investing in companies like Yihang or other ones. So it does seem like this business has endless competition, and the moat is not strong enough to protect them from future competition. And this to me might explain why the real reason why they reduced the valuation before the IPO. I would think it's because of the issue I just addressed, and probably they have missed the prime time of the IPO where they could get probably the highest valuation back in 2017 to 2019. And the last one is the water is too deep. This is a saying in Chinese that it does seem like quite complicated behind the scene because it's backed by so many institutions. It's good in a way they would get a lot of resources and support from big organizations. But the other side is that because there are so many institutions, it's impossible to know what everyone thinks, whether they are all aligned together, and whether they want to take this IPO as a way for them to finally able to exit from a big investment in this company for the past few years. I'm not sure it's a must, but I don't know at this point because there are so many institutions. This article says some investors are losing patience on this investment project and really eager for Didi to go public for their exit, which is the nature of venture capital or early investment or pre-IPO investment anyways, is to eventually have the company public so then they can finally get rewarded or exit from this investment. But right now it seems like they are selling the company with a big discount, a little bit in a hurry, I would say. I'm sure it's not all the investors, just there are so many institutions behind it, and like for example BAT, they are all in competition with each other. So I'm not sure if they want to stay this way. So that's why I would say the water is too deep. So it's hard for me to tell, and I would rather not guess. So that would be all the pros and cons. But after everything I've said, don't get me wrong, I do think in this IPO there is opportunity inside, at least in the short to medium term. It is one of the biggest IPO for Chinese companies. It is a famous app that almost everyone uses. Still does have the biggest market share in China. And even if the institutions need to exit, they've got to pull up the price at some point to exit, right? So that would be some opportunities in the short to medium term. But for the longer run, I still have too much uncertainties inside, or I guess they still have to prove their business model for now. We happen to be at the turning point of an industry again, I believe, with the technology faster and faster. Didi is facing bigger and bigger threat. So I do think right now it's almost getting into a turning point. And if I don't feel confident yet about the future 3 to 5 years, I probably won't consider at this point unless it had dipped to a price that is more than fair. Or unless they completely acquire Yihang, like our stock, ticker symbol EH, then I would rethink on Didi. Okay, now let me know what you think, whether you're planning to invest in Didi, and if you find the information helpful. Now, if you have enjoyed this video, please give me a big like and write me a great comment, and I will see you in my next video. That's it, guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.